Hello all, welcome to Billionaire. So this is Nifty Analysis video. So positionally, we are going to look at Nifty, how it's going to perform next week and what are expectations. So this is, by the way, last video which we created on 23rd March. So this is the chart from that video. So from 23rd March onwards, we had expected Nifty to go up towards this area, okay, of the channel. So that when you connect these lines on the by plotting channel on a trading view, you get this area, and we were expecting it to go towards this. But for a couple of days, we had a bearish view since this was, you could say, dark cloud cover candlestick pattern. So the same thing has happened. Even we discussed in detail about Elliott waves and everything. So yeah, so the positional view pretty much was in line. So last time we discussed on 23rd March from the desktop. Other days we discussed from the mobile. We discuss chart every day. So you can subscribe to our channel and watch daily videos of Nifty analysis. So yeah, on weekends, we can check Nifty's analysis through the desktop to get the better picture. So by the way of price action, we are seeing here that Nifty is trading in channels. So this is one channel which is plotted on these points. Okay, it was broken on the downside and then it is pulled back inside. So when you plot channel on these points, okay, you get this area. So that's what the idea was, to go on the upside after some consolidation. So same thing has happened, moving into the, like, today is the 3rd April. Here you see a consolidation in the range, in this range. After that, because there was a dark cloud cover bearish candle, after that couple of days it went silent. It was trading in very tight range between 17,300 and 17,006 or 3 it has hit, and after that it went up. So here you can see a bullish candle touching the channel. So we are here on 3rd April. Last Friday it was very bullish and it gave very rapid up move touching the channel. So now it looks bullish. It could break a channel as per the price action because the candle is very much bullish. So tomorrow it could break a channel. But as per the price action, you would consider this as a very bullish move, and it could break even 18,600. That's what the view you might have. But only price action is not sufficient to understand these things. We have to combine with indicators, or I'm following the Elliott Wave Theory, which can help me to further guide us where the markets are headed, whether it's going to finish breaking 18,600 and go to make new highs, 20K, 22K, etc. Right? So we will draw those conclusions for the upside once it breaks this. For now, we are having a bearish view going on the downside. So we are expecting it to reverse from this and break even this low. So that view we had discussed many times in our past videos, right? So that view had some basis. It's not vague view, or you could say it's not out of my bearish bias for the market. I don't have that, or I'm not considering any economical views, even war and everything. I'm not considering for putting up this view. It's based on pure technical analysis. So let's understand what happened on a lower time frame after we analyzed on 23rd March. So on 23rd March, we had this view again from that level that Nifty is going to go up towards 17,800, and then it would drop on the downside. So this was the view that we had. Unfortunately, Nifty in a B wave had went down. It has broken this, okay, and then went up. Okay, so that's what has happened. So this chart will change a little bit. We will discuss that in a short. So here you would notice that price is continuously rising on the upside, but MACD is going on the downside. So this is 15-minute chart, by the way, right, of Nifty. So Nifty is losing momentum. As you can see, there is a negative divergence and there is a price going upside, MACD is going downside. So momentum is losing. So that indicates there could be a potential top somewhere near 17,800 or even 18,000 could come, considering the last day's candle. So yeah, that was our view was towards 17,800 based on Fibonacci extension. So Fibonacci extension, when we plotted on these points, we got these 3 numbers. Okay, so this was already hit. So we were expecting it to go towards this. So this analysis has changed a bit since then, because it has broken this, like this B wave coming on the downside has broken this particular level. So I have to change analysis a little bit. So let's talk about that. Okay, let's talk about that analysis. Okay, so yeah, here you see on the same 23rd, we had a view that this is 5-wave structure 1, 2, 3, 4, 5, and since B wave has broken this, so 17,004 low it has made, 3.9 something low it has made on the Nifty. So yeah, so I'm shifting Y wave from here to here, okay, because I'm considering this as a wave and this as a B wave and this as a C wave, completing Y wave here, okay, Y wave on the larger degree, and then this is a X wave, and then the final wave Z wave going on the upside. Because this has broken this low since our past analysis, I'm considering that view going on the Z wave on the upside, and X wave will be here. So what is this XYZ ABC? This is Elliott wave, by the way. Let's talk about that. So Elliott wave has Elliott wave theory suggests that there are market moves in like the market movements are having repeated patterns. So it goes in 5 waves up, 3 waves down, and then goes up. Okay, and the patterns repeat over the time. So one of that pattern is a triple complex correction, where you can see that it is going on the downside as ABC, which is called as W, first move, then again ABC, this is connecting move X, then again ABC or WXY, more complex, where you will call this as X, Y, and then again ABC connecting wave called as X, ABC again as a down wave, as a Z wave. So WXYZ, these are the triple complex correction that you need to remember for this particular video. So this is one of the wave patterns that you need to remember for this video. So talking about that, what we are expecting is Nifty to move in a triple complex correction on the downside from 18,600. So this is the chart that we are talking about, right? So we are talking here that this is a W correction. Okay, this is X correction, and this is Y correction. Okay, and this is XX. Okay, or it could be a possible that there are double and a triple complex correction. So double complex correction contains two downward waves. Okay, so this one wave and this two wave, if it is finishing here, let's say it's making low here and breaking 18,600, then we have to assume that this is a double complex correction. Okay, instead of triple, it will be a double complex correction. So let's type that double complex correction as well. So we typed here triple. So this we checked as a triple. There is a double possibility as well, double complex correction as well. So in that, you would see that it goes two ways down, like mentioned here. You can see here WXY, it goes like this, and then it would break the previous high. Okay, this is the double complex correction. Both possibilities are open for us, but for now, what I'm considering is it is not going to break this based on MACD indicator, and we are considering somewhere here X is going to form and it would drop on the downside. So the levels for that is minimum this. Okay, it needs to break this. So somewhere around 15,300 to 15,000, we are expecting downside as a Z wave. So yeah, we will be proven wrong once it breaks this, but yeah, that's our forecast. It can go wrong as well. So we discussed a couple of things based on MACD that we are not going to go, we are not expecting it to break 18,600. So we discussed in all our previous videos. So let's talk about that. Let me bring up the MACD indicator. MACD, come on. MACD, okay. Yeah, so MACD indicator, when you plot here, you see that on the daily chart, you do not see a positive divergence. Here, there was a positive divergence, by the way. Okay, price is going down, MACD is going up. So after that, we see a big rally towards 18,600, 18,300. Okay, and then it dropped on the downside. So MACD has made a fresh low, means that there is still a downward movement. MACD has made a fresh low. Price has also made a fresh low. There is a no divergence as such here on the daily chart of Nifty. So which is making us think that there could be a Z wave. Okay, so XX will be formed somewhere here, and it will make one more small low, maybe 15,500, 300, or even 15,000, whatever it low makes, and it will go down like this. Okay, it will go down like this. It will make a divergence, positive divergence, meaning to say that downside is going to get over. So this will be a positive divergence, and this will be a negative positive divergence for us. Like MACD is making higher high, like higher low, and positive making price is making lower low. So this, after this, we can expect a sharp upside. So that is the reason. This is the reason that I'm expecting to be a Z wave coming in. So moving on to the next, let's analyze what is going to happen next. So this analysis we had last video of Thursday. I think on Thursday 31st we had the analysis that Nifty is going on the upside. We had a view that it is going to be a flat correction as A, B, C. Okay, going towards these levels. Yeah, I was positive of having this particular 17,600 to be coming. So same thing has happened. It has went beyond that. So that is a bit of surprise that last move was very sharp on the upside. So let's try to understand whether we are going to end there or we are going to go more upside. Okay, so let me open the Nifty's chart. Okay, so this is 15-minute chart, by the way, and we have plotted Elliott waves. So from again 15,671, we are seeing a complex correction W, X, Y, X, X, and Z. So on the upside as well, we are seeing that a complex correction exists. The reason for that is we see a triangle here, right? It's a triangle. So triangles doesn't form in the second wave. So you cannot call it as 1, 2. Okay, wave 1, 2, you cannot call this. So that's why I'm having a bearish count. There is a reason for that. Okay, so somewhere there are clues for us that we are going to make one more top and drop on the downside. But one thing to tell you that it's not yet confirmed. There is no confirmation given yet that we are going to go downside. We need on daily chart at least an engulfing candle or a shooting star or a black marubozu, evening star. These kind of reversal patterns should exist there. Right now, Nifty is bullish. It has made a marubozu candle here. You go and sell here, you will be punished heavily. You should not do that until there is a big bearish candle. For example, here you see a big bearish candle covering previous 3 candles. So this is a red marubozu, by the way. Here also there was a marubozu. So these things, and here again there was a red marubozu. So these signals the fall ahead, right? So such bearish signal should be coming. Otherwise, it's not going to fall anymore. It would go up, 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 and even it can break as well, and making us like this is a double complex correction, and then it will break and go on the upside. So you need to wait for that particular signal. Before that, it's not good to go bearish on the index. So as I said, let's plot some channels and show you why we are expecting like Nifty's to go down again. So let me bring up the 15-minute chart. So exit this. So 15-minute chart. So Nifty initially from 15,000 was trading in this channel. Okay. So when you plot channel like this, okay. So when you plot channel like this, you get that Nifty is still trading in a bigger channel. And here, let me adjust it a bit. Okay, so you get 1, 2, and 3 points. So these are the 3 points we are considering for plotting the channel. You can see that Nifty is still trading in this larger channel. Now, when we are considering WXYZ moves, so the WXYZ moves are like this, right? So this is W here, sorry. So W here, X here, Y here, XX here, and final Z wave is in progress. And when you plot Fibonacci on that, from like we want to get the target of Z wave. So you connect XX, and so these points, when you connect, you get these numbers, right? You get these numbers. So that's what we are expecting, that Nifty to head towards 17,800 or 900, right? 17,900. When you plot that, you get here, right? So this was the view of positional Nifty view. Let's go zoom in a bit. Okay, so this is how we had expected Nifty to move on the upside since 23rd March. And here we are expecting Z wave to be equal to Y wave, and that's why we can see that up move to be ending somewhere near 17,800. So that is our view is. So moving on to the chart. So this chart we are talking about. So here, let's take a closer look at this area and see what is happening. So by the way, as I said, last view of our was around 23rd March. And after that, Nifty had broken this particular low. Okay, that was 17,006. Okay, so it has made low of 17,004. Okay, here in this particular area. So because of that, I have shifted Y from this area to this area, and considering this entire move as A wave, B wave, C wave here. This, by the way, is a 5-wave moves. So I cannot consider this, like I cannot neglect this and cannot call it as even expanding flat and everything. So if you check 5-minute chart, this will look as a 5-wave move. So I'm labeling this as a Y, and going forward, we would see that Z wave is in progress, out of which it is going to again get complicated thing, because of which there is a MACD. You could see the losing momentum here, right? So MACD 15-minute chart, as I popped on my screen, you see here it has losing the momentum. So it is, so what I'm expecting it is to break this particular trend line and then drop on the downside. That is what I'm expecting. So this is the where I will get a signal. So once it gives the negative crossover above this trend line, I will get the signal. Even the candle will be very bearish, covering 2-3 candles on the downside. That will be the signal for me to go to consider the downside of the market, because it has rallied very high, and the rally is sluggish. By the way, price is curving on the downside. So ये price नीचे जा रहा है ऐसे, and MACD is going down. Sorry, price ऊपर जा रहा है but bend हो रहा है, right? The price is bending. So and MACD is going straight downside. So here it is like, so we have discussed this as well, that MACD creates 2 or more divergences. It breaks that trend line and then gives the final fall. We had discussed that as well in one of our videos. You can visit our channel, how to spot a crash. You can search for that video and look for that signal to go for the downside. So this is how we are looking at. So let's take a closer look. Let me zoom it a bit. So here again from 17,004 level, which was this low, we are considering that this 5-wave move as A wave. Here there is a B wave, and here there is a C wave, which is 5-wave moves. So here we are considering 1, 2, 3, 4, 5. Okay, C wave. So this entire move W is called as W because ABC. This is X wave, which is connecting, and here you can see that smaller low was made here. So 17,421.6 was not broken by this candle. So this candle made a low of 17,422. Okay, 422.6 something. It has made low. So by 1 point, it did not break that. So you understand like you need to know that even 1.1 break is not a break. Okay, so as per the Elliott Wave Theory, what I'm following is, if it does not break, then that pattern is still like your wave count is still valid. So that's how you need to remember. So here what we are assuming that C wave is in progress. So it could be a case that C wave currently has, so this could be a W wave, it could be X, and then it could be Y. So we could be ending here in a Y wave itself. Okay, or even it could retrace a bit and go under the upside. So now this point becomes a critical for us. So breach of this will tell us that we are going on the downside. So we have to wait and watch for break of this to get the confirmation. We will draw the Fibonacci and everything based on that. So for next 1 or 2 days, we have to see how, like whether there is some bearish candle created or not. Okay, based on that, we have to take the decision. Until then, we have to ride for the upside. So hope most of us are having an upside view. After that, like we had given earlier view that it is going on the upside. We exited somewhere around 17,610. Okay, but it rallied another, you could say 100 odd points on the upside with the big green candles created at the end of the day. So what we are assuming here is it could be wave 1, 2. Okay, this is 1, this is 2, and third wave is in progress, which has internally 1, 2, 3, 4, 5. Okay, completed here. So third wave completed here. It would go in the consolidation or drop sharp downside, because this is a slow wave on the down. So we can expect a sharp pullback first. So tomorrow, if it opens gap down, so case 1, if it opens gap down somewhere near this area, 17,600, okay, then it would consolidate in this range for some time, right? I'm not expecting a big gap down, but small gap down, it can open here. It would go zigzag down, okay, and then it would go on the upside, making one more high, and then it would drop on the downside. So this is the main view that I have, where 1, 2 are considered here, 3 consider here, and 4 consider here. If it opens gap down flat, this is the expectation that you should have. So the next fourth wave should be a sharper wave, because second wave was sluggish wave. Okay, so fourth will be here somewhere, and the fifth will go on the upside. So 17,600 to 17,550 max it should go. It should not, sorry, not 51. It should not break this top. Okay, it should not break this top. Otherwise, this wave count will be invalid. Okay, it should not break that. Okay, so hope you understand here by the Elliott wave principle. Wave 4 is not allowed to break the top of wave 1. So by considering that, even okay, so the second case will be opening a gap up. Okay, so that can happen as well. So 1, 2 is here. Third wave is still in progress, going on upside. So it could make top somewhere and then drop is also possible. So let's try to understand how much wave 3 went on the upside based on Fibonacci extension. So this was the sluggish move, right? But even that, it went upside. Sorry, I stopped the sharing. So here, let me draw a wave C target. So what can happen tomorrow is it can open gap up. It can go towards this 17,730. Okay, so somewhere near this it can go, and it would drop on the downside. Sharp downside it can give as A, B, C correction. Okay, A, B, C correction it can give, and then it would make one more high and drop. So that's what we are expecting, because this is wave 1, this is wave 2, and third wave is in progress. So fourth will be created again, and the fifth will go one more upside. So riding fifth wave will be, so this big move we will not see in a fifth wave. So as we said, we can expect one more drop, small drop in the next session. So it might open gap up. So that has good probability. By the way, somewhere around this it will open. Even if it opens higher, we should be looking for a red candle on 15-minute chart to look for the downside of 100 odd points, 100 to 200, even 100, or let's say 120, 50 points. We could go on the downside. So if it opens gap up, you should not go on the go on long side, because this will be a fourth wave as per my analysis. 1, 2, right? 1, 2. Let's draw it with the help of Elliott wave itself. So for our understanding, sorry for that. So like this, we are going to go down. Let me remove this channel. It has no use now. And yeah, so what we are expecting is it to go up, C wave to go up, right? So this is the way it should go up. Make one more small high. Maybe it will open flat or gap up, small gap up. It can extend as well, right? Wave 3 can extend. Let me call it, let me add some more numbers here. So full extended, by the way, that is template. So the next extension is this after 17,730. If it moves higher, then it will go towards this level as well. Let me plot another wave in between. Okay, so what I am expecting is it to end wave 3 here itself at 17,700, or it could end between these levels, right? So it could end between these levels. So tomorrow, if it opens gap up between 17,730, it would go towards, it can even go towards this. Third wave should end here. Okay, third ends here, then it would drop, and then it would go again upside as a fifth wave. So fifth wave target will be depending upon the fourth wave. So we'll discuss that later. So for tomorrow's session, we have to wait and see for first 15 to 30 minutes, if some negative candles forms here, then it would be a good opportunity for fourth wave riding, and then it will be a fifth wave on the upside. So if it goes near this, then what you can expect is it would drop somewhere near to 17,650, 100 to 150 points you can expect till 17,600, because it will be a sharp wave ABC, and then it would make one more top and then drop. So let's see and let's hope we discuss both bullish and bearish case for next session. Option chain data, let's check quickly. So option chain data here shows us that 17,500 has become major support. You could see a big 47 lakh. So this is the biggest number, by the way, 47 lakh put writers present here on 17,500. So we discussed regarding the option chain in detail. You can watch that video. So this is the major support now, and major resistance is at 18,000. Okay, so 43 lakh call writers are present on the so this is the range for this expiry, by the way. So it can move on the upside toward this. Okay, but if it crosses 18,000, it will be a sharp pulled back on the downside, because this is the major resistance for this expiry. 18,500 is still very less, and then we cannot expect it to go toward this. But yeah, 18,000 should be the stop for us max. That's what I'm expecting as per the option chain data as well. So a move is not expected beyond 17,500 immediately. So if it happens tomorrow, then again it will be a consolidation for us. So 17,500 it should not break. So what we are expecting is one more wave up. So 17,900 something it should test. 17,900, even 18,000 it can test, and then it would drop on the downside. That's how our view is. So thank you. Hope you like the analysis. Share with your friends, subscribe it. Have a good day. Bye-bye.